Let's quickly pull up the stock of Anand Rathi Wealth, and we'll quickly go to that conversation as well. The management came out with its earnings yesterday. My colleague Shahad caught up with the management. Let's listen into what they had to say.
The overall sentiment in that HNI category which you are catering to, has that actually the growth rates which we are expecting maybe 2 years ago when the IPO had come of the company, and now seeing the market conditions, is the asset allocation playing a bit differently, and if yes, is it hitting the equity segment, at least for the segment which you are catering to?
Yes, Sharad, but I think this is my 18th quarter as a company result. So we got listed in December 2021. This is our 18th quarter. We've always been telling our shareholders what to expect out of us. And because we understand our client segment and we filter our clients on certain basis. So to answer your first question, whether the asset allocation has changed, the answer is no. When markets are down is when we get our clients to buy more. Are they inherently very positive at these times? The answer is not at all. That's when me and my colleagues, 400 of us, go into the market and tell them that market always goes up. That's the reality. There have been 12 wars. Market has gone back up once the war has finished. But that data is too difficult for one to notice by himself or herself. So we as advisors handhold them, is why you would see a large portion of equity allocations happened in this quarter when the market sentiment was bad. Left to themselves, I as an HNI will also be very depressed. There has to be some Sathi who comes and brings in rationality rather than the heart aspect of wealth management. That's why you see net mobilizations have been good for the quarter. Asset allocation has not changed though.
Okay, so the asset allocation hasn't changed, but the growth rates which was there, I think you have given a growth rate of that 20 to 25% growth rate. Will that continue? Will you stick with that guidance going ahead also in the long term, or is there something there for the medium term which is different?
No, it's not very different because we've created a very uncomplicated business. Our pitch to the client is also uncomplicated. To the shareholder also, we have a very uncomplicated business. We don't sell agile things. We sell to our clients what is actually needed, not something so innovative that money becomes experimental. So coming back to your question of what's the growth guidance, we have guided 1,415 crores of revenue on a base of 1,198, which is what we finished last year. We had again projected 1,175. We did 23 crores more of revenue than projected, owing to the principles which our elders in the company have laid down. Don't overcommit, always undercommit and over-deliver. With the same principle, we are committing a revenue of 1,415, a profit or a PAT guidance of 460 crores, and an assets under management guidance of 1,20,000 crores. We ended at 93,000 crores. These again have to be seen with a conservative bent of mind when we guide, and that's where you see last 4 years we've always given a guidance and have met it, and there has been not any quarter less than 20% growth, and we are one of the few companies which have been able to do that for 18 consecutive quarters.
Right, definitely the guidance everything takes in. I just wanted to understand a little bit more, especially on your operational parameters. The active clients, that's how much current levels is there. The growth was around 14% which I checked on a year-on-year basis. And how does this client addition is panning out? Is there any change happening in the constituent of the client, or is it going towards a larger client bases, or the smaller ones are also getting included? How's the change happening in the client setup right now, if any?
Sharad sir, your question has 2-3 questions intertwined. Let me first break it down. How do we acquire clients, and what is the segment of the clients we acquire? When we acquire client families, we are very selective of whom we want to bring in. We don't bring short-term clients. We don't want to add assets from people who are not investing for a lifetime. We want intergenerational wealth. Largely, that's how it works. That's why our client attrition numbers are point in decimals, if not in second decimals. On a quarterly basis, they are in second decimal. So coming back, we have a very, very tight, clear mandate of what is our target segment. Having said which, we acquire using references, cold calls, website leads, people coming to us, or maybe LinkedIn and all these social media platforms where you reach out to people.